Hey, we are live. Here we are. We are on Facebook. We are live. And man, what a difference. You know, I'm sitting here in my little studio and I'm looking out the windows. And guess what I see? I see the beginnings of a snow today that between now and tomorrow morning is supposed to drop 6 to 9 inches or maybe more. Over east of here, it could be a foot or more of snow. So this is one of those events of the year. It's a week before Christmas, and it's going to be a crazy day today. It's already snowing right now, and the grass is white and everything else. So it's great to be here today to share with you. We start every program with prayers for everybody that's been affected by COVID, people that have lost loved ones, prayers for the loved ones that have been lost, that the Lord would open his arms and take them into his kingdom. It can't be better said than that, I don't believe. We are all in a moment in time where we all have to make decisions every day. You know, we make decisions about wearing a mask. We make decisions about staying home versus venturing out. Life is full of decisions. And today is no different. Your financial future is no different. You have to make decisions. The more wealth that you create, the more you have, the more critical the decisions become. So in my creation of the Financial Mastery Blueprint, the purpose of the blueprint is to provide a guide, you know, a guideline to take you through some of the strategies to handle some of the challenges that come along and just literally make a difference. You know, I'm going to cover some things today in my presentation. We're going to talk about the blueprint today. We're going to talk about some specific strategies. And the strategies are important because in order to implement some of these strategies, you can't plan for them for a week before you retire. You have to plan for them today. You have to be in the process. So when I think of retirement planning, you know, I have these new initials after my name, RICP, okay, Retirement Income Certified Professional. In those studies, there were some new things that I learned in there that caused me or led me to think very differently about some things. It also, at the same time, reinforced my thinking process when it comes to planning for retirement. And so much of the typical financial planning process that's out there today that you become exposed to through typical financial planners is all about gathering and taking control of all of your assets. And I think we are all better served by staying in control of our assets, but you have to have a plan. You know, when I talk to folks about 401k and putting all that money into the 401k plan, I had somebody here earlier today. He was putting in 10% of his income, but his employer was putting in 11.5. I don't know how that works, but the employer was putting in a lot of money into this gentleman's 401k. And how does that work? We went from there to the debt clock and talked about the current debt of the government, the 27 plus trillion, and now 156 trillion unfunded liability. So 156 and 27 is how much is that? That's 183 trillion. I don't know how you comprehend that number. It doesn't make any sense to me. It's too big. If I add it all together, it is 1.3 million per taxpayer. Now, let's say you had a mortgage for $130,000. That's a normal mortgage, average balance. Your monthly payment would be $700-800 a month. Agreed? I think so. So now take that to $1.3 million, take it times 10. So now your monthly mortgage payment is $8,000 to $9,000 a month. And now you're paying a mortgage for the next 30 years. And you know what? There's nobody paying any money on the future unfunded liability or the debt. They are actually continuing to run it up, add to it, and increase it, because our politicians are inept. They lack responsibility, because, they may not get reelected. They may have to make a decision that would make us not like them. So I don't know how that's all going to work out. All I know is that my focus is to help folks get control of their money and have a plan of some kind and put in the action required in the plan. One of the bases for the CFO project is to have your own business. Now, we all have a business. You have a business, your home, your life together, your family. You are a self-employed business. You trade time for money, and then it becomes your responsibility to manage that money so that it pays all the bills now. You save money so you can pay the bills later. How much of us really have savings? You need to look at your annual income and reduce it by 20%. So if you're making $100,000 a year, $20,000 goes into savings and you live on $80,000. If you're making $200,000 a year, well, $200,000 a year should be 25%. So that means you live on 150 and you save 50. You have to take the step, folks. You have to make a decision to start making a difference. 10 key points about becoming your own banker. Banking is the most important business in the world. In fact, you need to be in two businesses, your own business and the banking business. Banking is the biggest business in the world. Everybody needs and uses banking of some kind. Why not learning how to control that process in your own life? What is banking? Someone or some organization has control of a pool of money that can and must flow at a cost to meet some need. The cost is called interest. That leads me to a discussion about opportunity cost. Because when you spend money unknowingly or unnecessarily, you pay interest on a loan to the bank or the financial institution uptown. You pay taxes to the federal government. Every one of those dollars is gone out of your life forever. So what was the value of that dollar? And what we find ourselves doing is we look at that dollar and say, it was only $1. But that dollar over your lifetime, compounded at interest, equates to what I refer to as opportunity cost. We did a story about the automobile. You have a $25,000 automobile, you buy it, you finance it for 60 months at the bank or the car dealership or wherever you got the financing. They charge you 8% interest. So in 5 years, you've spent $5,400 in interest on this car loan. That $5,400, had it been invested at 8% for the next 40 years until your retirement date, is worth $253,000. So now you're 65 and you've lost $253,000. Life expectancy is another 20 years. If I only use an average of 3%, money doubles in 20 years. So the 253,000 becomes $556,000 over your lifespan that you lost financing one automobile. So now you finance an automobile every 5 years. So every 5 years, you repeat that process. So at the end of the 40 years, you financed 10 automobiles. And now the lost opportunity, the opportunity cost is $770,000. And now 20 more years to your life expectancy, 770 in 20 years at 3% rate of return is now $1,040,000. So I'm sorry, that's $1,440,000. So that those automobiles, just financing a car every 5 years over your lifetime, you're going to lose $770,000 over your lifetime. It's $1,540,000. See, I honestly believe that if you look at credit cards and car loans, every family in America, average family, you earn income above poverty level, let's say 75,000 and up, should end up at retirement with absolutely minimum 1.5 million in accessible savings, capital, cash. How you doing? Gentleman that was just here, husband and wife, they make $150,000 a year. And right now he's got about $523,000. At his current level of income, after taxes and everything, he runs out of money at age 82. So all of his money is completely gone at age 82, unless he lowers his lifestyle by a minimum of 20%. How do you do that? I don't know. See, to me, retirement, while we're working, we have one Saturday a week. When I'm retired, I have 6 Saturdays a week. When you go on vacation, do you typically spend more money than when you're at home in your normal routine of lifestyle, work every day, weekends off? So you go on vacation, don't you spend more money on your vacation? Well, retirement is supposed to be what? 52 weeks a year vacation. And you're planning on spending less? Weren't you dreaming of enjoying retirement? I thought you were. There was only one pool of money in the world. It is all part of the same system. It's like water. You know, the oceans, 80% of the surface of the earth is covered in water. So you got oceans, you got rivers and all those things. And that water moves constantly every day. It gets evaporated, it goes up into the air, it's a cloud, it rains it back down. We drink water, we pee it out. Water has to move. Money is the same way. In order to create more money, money has to move. If everybody got paid on payday, went to the bank, got their money, got it all in cash, went home and buried it in the backyard in a tin can, the economy would come to a halt immediately. Because understanding economics, Austrian or otherwise, it's about the movement of money. Typical economics, in the way that typically understanding it, it's a study of scarcity of resources. You know, when you look at scarcity of resources, that was the Club of Rome, the story that I talked about, where they predicted the world was going to run out of oil by 1993. That didn't happen. But what happened along the way, because of these so-called smart people making their projection and their claim, they were so respected because of their book learning, how much money and wealth was lost because of what they said. I mean, I read a book by Paul Zane Pilzer, Unlimited Wealth, God Wants You to Be Rich. That's the title of the book. And his book, in his PhD, his thesis, was about economic alchemy. And economic alchemy, in the very bottom, the basis of it, is there are no limitation on resources. The only limitation that exists is the 6 inches between your ears. Because everything came from there, other than what was naturally created by the Lord above. In the 1800s, they were killing whales all over the world to make candles, and whale oil turned into candle wax, et cetera, et cetera. While they were killing all the whales, they were going to run out. And then somebody named Drake found this black goo in Pennsylvania, up in Franklin, PA. Here in the US, crude oil. The Indians burned it. They used it to burn. And that became oil. Now, here we are today. And the Club of Rome predicted we'd be out of oil by 1993. Crude oil be gone. We'd all use it up. Well, what has since happened? Technology allowed us to find more oil. And right now, oil and gas, there's enough for another 200 plus years based on the technology today. So where did that come from? That was 6 inches in somebody's ears. You finance everything you buy. You either pay interest to someone else or you give up interest you could have earned elsewhere. Think about that for a minute. You finance everything you buy. If you borrow money from the bank to pay for something, you pay them interest to use their money. If you pay cash for something, don't you lose the interest your money would have earned? Absolutely. So back to our macroeconomic planning, so that at some future date, we might refer to as retirement, I want to have the most money I can have when I get there. And I don't do that by sitting here saying, okay, well, I need X number of dollars. I need 500,000. I need $1 million. 10, 20, 30 years from now. That plan will never work. It doesn't work, never has. And prior to 1970, those kind of plans weren't even talked about, because financial planning, the typical planning we see and hear about today, didn't come into being till in the early 1970s. It was out of the result of the inflation of Jimmy Carter in the late 70s that really positioned typical financial planning to be the way to do things, the real financial information. Booyah. It is not. Horse pucky. I disprove it every day. I spend every day of my life when I meet with people disproving what the financial world told them to do, typically. Hey, we're going to cut it off there. Today's Wednesday. I'll be back tomorrow at noon. We're going to continue our discussion about the key points of becoming your own banker. We're going to talk about the Financial Mastery Blueprint and the rules and how to do this piece by piece with certainty to create real financial well-being and wealth. Hey, get my book, The Family Money Farm, The CFO Project. Get it at Barnes & Nobles, Amazon. You can get it out there, big booksellers. You can get it through me. You can send me a comment today. If you're watching this, you can send me a comment. You can send me an email to firedupt@comcast.net. So there's my book, Family Money Farm, The CFO Project. Over here is another book, Life Insurance Will It Pay When I Die. Chapter 8 in this book is the secret chapter. It's all about opportunity costs. It will help you to understand what I'm talking about. Now, to get this book, you go to CFOproject.com, put in your name and email address, and you will get a link that will give you my book, The Family Money Farm, is a PDF. It's a complete download cover to cover. You can load it on your computer, put it on your iPhone, and read it there, your Kindle, whatever, read it there. Now, when you go to CFO-project.com up here, when you put in your name and email address, it's going to take you to another page. And I'm going to highly recommend that you invest $47 and you'll get 4 more books. One of those books is this book here, Life Insurance Will Pay When I Die. Another book called Live Your Life Insurance. Another ebook called Jumpstart Your Financial Freedom. And another ebook, The Infinite Banking Concept, part 1 of Nelson Nash's book, The Infinite Banking Concept. And a 1-hour video that will literally change your life. It gives you verifiable proof that I'm right and that I can change your future dramatically. But you got to want it. It isn't going to happen without you wanting it and being willing to put in the action. Make the decisions that have to be made in your life. Because remember, if you don't make these decisions to better yourself, somebody else is going to make them, and then they turn you into the acceptable level of mediocrity. But if that's what you want, okay, I respect everybody in the decision they make, but I'm here to help you. It's what my mission in life is. It's what I do. And my goal is to touch 1 million lives before I die. God bless. We'll see you tomorrow here at noon again.